Stephen here from Share Navigator. It's Sunday, March the 29th, and we're setting up our strategy now for the week for the S&P 500, but I want to cover three critical areas. First of all, we're going to have a look at the technical assessment of the S&P. Second of all, we're going to look at potential strikes for our next option trade for the US 500. Remember, we're crushing it at the minute. We're up 9.2% year to date, where the market is down almost 6% now at this stage. So we're smashing the market. And then finally, I'm going to talk about, we're going to pivot at some point to actually buying the physical asset of the S&P 500. I'm going to explain why. So first of all, look at our technical assessment. We're in a short-term downtrend, lower highs, lower lows. That's clear to see here. 200-day moving average is broken. A key support area here, these 2 points here, 1 and 2, broken. So you can see the market is breaking through support quite easily at the moment. We've kind of landed at a mini support area here with these 2 points and a bit of commonality here. So this may or may not hold. We don't know this week. We'll have to wait and see. But if that doesn't hold, I would suggest that we're actually going probably down to around the 6,200 level. So from a technical point of view, clear short-term downtrend. One of our rules to avoid washouts in the short put strategy is don't actually place a short put when the S&P 500 is below its 200-day moving average. We're below that. We're in a clear downtrend, so we remain patient. It doesn't mean we're not going to place a trade. What we're saying here is we just need to be extra cautious. And one thing in favor of our technicals at the minute, I like to see the RSI get below 30, which we're there now. That basically is an oversold condition. It doesn't mean it can't stay oversold for quite some time. If we go back in over history here, it went oversold here this time last year, and then the market fell another 5 or 10% from there. So we're not saying it's the end of the downtrend, but it means that at some point in time, we will come out of this oversold condition, and that will be a good opportunity to buy. So we're liking this here. So right now, just looking at this sell-off here, you would imagine, the VIX is going to be quite high, and that's our advantage. This is why we're winning in the market at the minute. We're using this volatility to our advantage. So this is our volatility, our fear index. When this is up, option premiums are up, and because we're selling put option premiums, we're getting paid more to take the risk. And that's the reason why it's a great time to know about option trading. So moving on, if you look right now, in terms of our strategy, we're looking at the April 30th. This is our IG account. And by the way, if anybody needs any help setting up their IG account, please send us a WhatsApp or whatever, and we can do a quick webinar and help you get set up. There's no problem there. But right now we're looking at selling the 5,500 short puts here. And that will get us our 2.5% return for the month of April. And just from a technical perspective on that, that is quite a fall actually from where it's currently at. I think it's about 13%. So the market closed here on Friday. If we wrote this put, we would be allowing the market to fall another 13.5% in a month, basically, before we would actually get into trouble on that trade. And that trade will be quite easily managed, and it is a critical support area here. So it is an area we're kind of watching at the moment, but we're not ready to pull the trigger yet. Because if we create new lows on this week, I think we might actually be able to write the 5,200 put, which would allow us another 18% drop. So I would feel a lot more comfortable with that. So that's why we're just holding off a little bit, waiting to see how low this market can go, because I think we might be able to get down as low as the 5,200 strike and write that put option down there. But if things do settle down this week, 5,500 is an area we could look at, and our probability of profit, if you look at it from the point of view of doing the MES, which is the equivalent in interactive brokers, by the way. So we sold a put option there. You can see we'd be writing 2. The margin on this is only 2k for a 10k account, so we'd be able to write 2 contracts there and get 3% in premium up. You can see our probability of profit here is 97%. So this is us using volatility to our advantage. And what we're saying with this trade, just as a reminder, we're getting paid an insurance premium, and basically as long as the S&P 500 didn't fall below our strike, so we picked 5,500, we will make money if the market goes up, if it goes sideways, and even if it falls, as long as it didn't fall in more than 13% in the month, we would make money. So that's how we envisage our next trade. But again, we're just going to remain patient and let's see, does that fear index even jump up a little bit further? So we'll just exercise a bit of patience here. But the final thing then I want to talk about, and again, it's relating back to this VIX here. And I think a lot of people make mistakes. So at some point in time, we're going to go bullish on the market. For example, it's going to sell off enough and we're going to say, actually, now is a great time to buy. And it's always very hard to do psychologically. When the markets have sold off hard, you're looking at the news, it's bad everywhere. And it's usually very hard to get yourself to buy, but trust me, it is the best time to buy. And you're going to see this VIX up high. And the problem, what people tend to do is they tend to switch then to call options. And I'm not saying there's anything wrong with call options. But for example, if the S&P 500 did fall, for example, another 5% from here, there's a good chance that VIX is going to be up over 35. And remember, when the volatility index is up higher, your option premiums are higher too. So when you're buying your call options, then you're paying more for the call option when you're buying them if you want to go long in the market. So we would actually prefer if you switch to just buying the physical stock itself. So for example, if we did get a big washout in the market, we're going to continue with our short put strategy number one, right? But if it got to a point where the market had fallen enough and actually we were starting to change our mind, maybe the RSI crosses back above 30, I would suggest that you actually buy the physical stock itself rather than a call option. And the reason for that is when the market starts to ease out, volatility will get crushed and the option premiums will come in. So even if your call option, for example, if you did buy a call option, even if the stock went up, you mightn't necessarily make money in your call option because you pay too much for it. Whereas you will if you buy the physical stock itself. So I would encourage people on that final note, if you're in IG and you're just doing the tax-free spread betting, which is brilliant, I would also open up a share dealing account with them and it will be in your main dashboard. So it's opened within your IG account. This is a demo account, folks. There isn't a share dealing account with it, but you will see your share dealing account here. And you can rotate your money out of your spread betting account into your share dealing account when you just want to go and buy the S&P 500. And the reason I'm saying that is, finally, just back to the chart, I just want to show you when things reverse, the reverse is usually quite substantial. So even look at here, I'm not saying you would have got your timing perfect, even if we bought it here, for example, back up to the 200-day moving average, that's 9%. So that's a lot more than our 2.5% we're targeting for April, for example. So my point is there will come a time where I'd be saying actually it's better to buy the S&P 500. The only downside for people using IG is that that won't be tax-free. You will be subject to capital gains tax and that in the UK and Ireland. And IBKR you will use SPY, but it will be a more profitable way to play the rebound if and when that comes. I'm not saying we're ready to play the rebound now. We're far from that. We were sticking with our with our volatility strategy of selling put options. It's the high probability trade. That's the way to go. But when we get to a level where this is literally quite obvious, it's overblown and we're about to rebound, I would suggest you switch then to actually buying the physical stock. So make sure your accounts are set up for that. Okay, if you have any questions on this, guys, as you know, WhatsApp me, let me know. If you need help setting up your IG account or anything like that, or your Interactive Brokers account, please just book a web meeting with us through the website. Be more than happy to help. Okay, this is Stephen with a quick market update. Thanks and bye for now.